But like, where does this all end? Like this just like stimulus after stimulus and like inflating of assets. Like to me, it seems like everything is in a huge bubble: housing, equities, crypto. Like it does it like
it's not a bubble if you look at it in the right terms. So I stumbled across this. Gold is the great price anchor, right? Everyone's used gold as a relative asset pricing forever as a system of money. Real estate versus gold, it's about in line. So it's kind of at fair value. Equities versus gold are pretty much at fair value. It makes you think, why are we thinking everything's a bubble? And then I realized what was going on is that the central bank printing was devaluing the purchasing power of fiat currency, but against these rare fixed assets. And only against those, and not against wages and not against earnings. So think that through. Price of an equity goes up because equities are rare assets. Earnings don't go up. So I just saw today, Microsoft over the last 5 years or whatever the number is, has gone up. Their earnings have gone up 50%. Their price has gone up 400%.
Wow.
This is to do with the balance sheet and the devaluing of money. That's why people feel poorer, because wages aren't going up at the same rate. The balance sheet is inflating these assets, so you can buy less of them. So how does this continue? Well, firstly, we've done the right thing, which is build a parallel financial system with parallel assets that actually keep pace with this, right? Good, because if we hadn't have done that, we're in bigger trouble. So that is our answer. Then how do you transition off this slowly? Well, it's slowly, and then all at once, the migration moves. So will eventually all of this debt be devalued down to nothing? Probably. Will we have to use a different currency system? Potentially. But I think it just continues, and more people become aware of it, and therefore more and more people opt out of it. And if we opt out of it create, I think it's a slow process. I thought all of us in the macro world thought it was going to end with a bang. And this last recession proved to me it's not going to end with a bang. It's going to end with a whimper. It's going to we're all going to move over there, and then we're going to be immune to it.
Amazing. Okay, so how this all plays out, what you're seeing is all of these asset prices seem to be in a bubble and inflating, and that seems to be that way because fiat money is eroding, like it's
correct,
depreciating.
Japan is showing the way. The central banks will own all of the government debt. They will not allow credit markets to function because they can't. They can't really allow equity markets to go down either. So it becomes this place where it's very difficult to get returns. Risk isn't priced correctly. So it pushes more and more people into this other world too. In the end of it, they either have to change course once they've bought all the government bonds, or they're going to have to understand that this is going to entirely collapse these currencies. If you play it through to its logical conclusion, and nobody will care because we'll have left it. And so us leaving it is what causes the final collapse of currencies. I'm not that apocalyptical. I kind of figure human ingenuity will figure some way to stop that end game, the hyperinflation, Weimar Republic, Venezuela outcome. But, we've just repeated it again in Lebanon, and we keep doing it. So it could happen. But the good thing is we've got a way out. I called it the Bitcoin life raft.
So interesting. But then, what will happen with national currencies if like everyone is going to Bitcoin or ETH or whatever?
I don't think that's necessarily going to be the case. I think we've got the option. What I think most likely happens is somewhere down the road, the IMF or the World Bank or G20 create a global basket of currencies. Okay. And they basically use that as a world coin, and they're all going to be central bank digital currencies at that point. And to remain as part of that, you won't be able to expand your money supply more than 2%. So then you've got a more stable currency that doesn't go up and down so much because everything's pegged to the dollar. So you're a South African exporter, it's a nightmare for you. But if this is a world pricing basket that's a world coin that has restricted supply, well, you solve a lot of problems. Now, you probably want to devalue as much as you can first and then do that. So I think it doesn't have to go to the end game. It can go to a different stopping point. Now, does that last forever? Probably not. No currency regime ever does. But that would change the whole conversation a lot if that happened.
I mean, that would be just mind-blowing. It would mean that like countries don't have their own like independent like policies anymore, like monetary policies, or like, I don't know, like how to like regulate trade, or
well, I mean, that's Europe, right?
Yeah.
That is Europe. And, to some extent it works and to some extent it doesn't work. Now, do you have internal currencies and external currencies? Well, South Africa had that for years. That's possible too. So I don't know. I mean, there's ways of solving this. And so you can still have the independent currencies, but maybe everybody trades using this basket. So it kind of lowers everybody's volatility. I don't know. But I think there are answers, and it doesn't always have to end with everything's going to zero.
Say in the next 12 months, does Bitcoin, ETH, DeFi tokens, do they decouple and start trading because of their own like separate fundamentals, or are they going to continue as correlated as they have been?
Pretty much every equity is correlated to the S&P 500. Every currency is basically driven by the dollar. Every bond market's driven by the US bond market. I don't see why it should be any different. There'll be relative outperformance differences. Maybe Bitcoin doesn't do the best, like the S&P doesn't always do the best. But if the crypto market itself is falling, it's like the equity market itself is falling, I don't have a problem with that. And there will be whole periods where, some DeFi protocol just continues to go up in a down cycle because it's getting more network effects and it's attracting a larger share of capital than it would do. So yes, I think there'll be less correlation over time, but it will be correlated by the nature of all assets.
Makes sense.
Because there's something called a risk curve, right? So the least risky is Bitcoin and maybe Ethereum. And, the social token that's come out on some unknown artist is probably like the most risky. Who knows, right? Or a DeFi protocol that's got tons of money and it could go to zero immediately. People allocate according to the risk curve. And the longer a bull market is in play, the more they go out the risk curve to get better rewards. And the moment things become more volatile, the moment they come back to the least risky asset. It's how all markets work. So I don't think it's any different.